All right, here we are with the live account. It is October 24th. So far, so good. We got 42 days that I've made more than $200 since my last payout. Looking at 81% winning days with 81 days complete. So pretty nice statistics there. Unfortunately, I've had losers that have been huge compared to some small winners, which has set this account back. But right now, currently sitting at $7,420, well out of rehab and growing. And again, I was just waiting for some good opportunities to start scaling up and get moving. Unfortunately, yesterday missed that opportunity to really go big on that trade because I wasn't able to frame it out. This account would be probably over 8,000 by now. But we'll see what happens today. Waiting for some good opportunities, jump in, start scaling up and growing this live account. So I had a question on one of my comments. It is, let's see here. All right, so at DMN7744 asked me a question based on a 100 trade backtest. It says, so if you're following your trading plan and every trade you take is within your strategy, but isn't showing you what the backtest results had offered, do you change the strategy or tweak it? So that was the question. So I want to go into that. So I'm going to bring up my backtest and my current tracking, and let's talk about that. And that comment is coming off of the video I made talking about how I track my trades, so I can see when I have higher probabilities and lower probability setups. If I have 4 winners in a row, most of the time, say 90% of the time, I'm going to have a loser. Well, then on that 5th trade, do I want to go huge, like swing for a home run? Definitely not. But at the same time, if I've had 2 losers in a row and I've never had more than 3 losers in a row, then do I want to start to go big on that one? Probably. So by tracking your trades and kind of seeing where there's opportunities to, scale up and scale down, can also help grow the account and protect the account. Kind of like you're on a racetrack, you get on the straightaway, you want to punch it, but when you're in that corner, you need to let up a little bit. So it's kind of like that. Okay, so we're looking at the ES. So I use this for both tracking my, back testing, but I also use it for tracking my trades. So if the ES, when I go through my system, I have my rules, I have all this stuff, right? If I come down and end up with a 76% success rate based on a 1-to-1 strategy, I need above 70% for this strategy to be effective for me. So that number, what does that success rate mean to you? It depends on your strategy and what you're doing. If you have a 90% success rate, that might not be enough if you're losing a lot more than you're making. But if you have a 40% success rate, that might be plenty if you're making 4 times what you're losing per trade. So this number by itself doesn't really mean anything. It needs to be paired with what the profit and loss is on the trade. So below 70% on a 1-to-1 with the way I trade doesn't work for me. So I need to have above 70% with the 1-to-1. Now, if I go to a risk 1 to make 2, then at 55-60%, I can be pretty good. Once I get below, even at 55 is hard, but at 60% and above, it's really easy. And get below 55, then I need to figure out what's going on. So once I have this set up, and this is what I'm going to trade, then I start tracking what I'm doing. So what I do is I take my number down here, see the 89 and the 28 right here at the bottom of this, these two, and I put it right here in the top section. Just drop them in right there so that I can continue with actual trading, what's taking place. Now, if I don't trade on a day, but I still come in and look to see what that day did, and I'll mark it in here because I need to be able to track what's happening. If there was a no trade day, then I'll put a 0 in right here. Or if I would have gotten out flat on the day, or if I did get out flat on the day, I'll just put a 0 in. That's what I'll do a lot of times. But I'll come down here and I'll start tracking what's happening real time on the days. So, and then I'll scroll down and see what was taking place. And then as I'm doing that, I'll keep on checking the bottom. And if this gets below 70%, like this at 69.78, yeah, it's almost 70, but it's not 70, and my trade plan says no more trading. So now I'll continue tracking this because this may come back into favor eventually. And when it does, then I can start trading it again. But as long as it's out or below that 70%, no deal. So then what do? Do I just not trade anymore? No, a lot of times I'll go back in here and I'll go back through the charts and I'll see if I can find the adjustment that then brings this back into favor. Or I might hit pause on this ticker and trade my other tickers who are back in favor. The equities might not be working so well, but then maybe the metals or some other commodity is doing really well, right? Maybe corn is what's hot, or gold, or whatever it is. And maybe I just put my focus there until this one gets back online. So, but I definitely don't want to keep trading it. If I can make an adjustment to the strategy that lets me get back in and start trading it again, great. But just because I have a bad day or a bad week trading, I don't make an adjustment. So if I have a losing streak in here, I'm not just going to stop trading because there's a losing streak. I'm not going to say my strategy is bad. I need to see it fall below 70% to determine that. So because I can't make money with that anymore. So I wait for that, not just a bad day or a bad week. I wait for this to tell me that I need to hit pause on that strategy with that ticker. Each ticker acts differently. So my strategy might still be great using it with a different ticker. Just this one, it might not be so hot. So to answer your question, do I tweak it or do I change the strategy based on what's happening here? So, just like I said, just because I have losses doesn't matter. It's when it falls below a threshold that I can be profitable on. And I would say my strategy has never changed. It hasn't changed probably in 10 years, but I tweak it a lot. So for example, I may be trading on the 1 minute candle and then I switch it to a 5 or 10 minute candle. It's still the same strategy, just in a different time frame. Or I might be looking for a different entry and exits based on the same rough strategy. It's not like I threw it out completely. So I would say I mostly tweak, then completely change. But yeah, and then different tickers like different tweaks, if you will, but still on the basic overall strategy. So I hope that answers that question. Hopefully that helps some of you out there that are looking at it and doing your back testing. Are you tracking your back testing, your results going forward to see not your personal results, but the results of your strategy? And then do you have some kind of threshold that tells you, hey, I'm below that threshold. I'm probably not going to be able to make money because of all the numbers and how the math works out. And then I need to do something. Do you all do that? All right, everybody, let's get into today's trades. Okay, get ready to jump in long on the YM with one contract here.
Order filled.
Okay, now long on the YM with one contract. Let me move this over so I can see this real quick. Get my stop in, sell stop market 2.
Order submitted.
All right. Things are happening fast right now with the YM. I'm a little unprepared. Okay, got my stop in. Looks like I'm gonna get stopped out. This didn't look like a great trade, but it's a trade and I'm just trading the probabilities.
Order filled.
All right, so stopped out of that one. Okay, I'm gonna get short. Oh, might be a little bit late.
Order filled.
Okay, jumped in short the YM, 2 contracts.
Order submitted.
It's a little late on that trade, so this might not work out so good. We shall see. I was looking to get short, run poke back down to the bottom of this right here, which it did, but I tried to talk about it first and missed the opportunity. Looking for a break below and a nice little run down here. Switch over and look at the 5-minute real quick. Yeah, YM's breaking down a little bit, but it's kind of coming into a support area. See if it wants to make a run all the way down here. Run to the bottom here, 2.531. Let's look at the 30. Yeah, I would like to have gotten in up here on that short. Definitely got more room to the downside available here. Back to this low down here. Potentially even lower. Let's look at this 60. All right, cool. Let's go back to the 5. Looking good. Gonna drop a line on the chart. Grab this. Yeah, bummed out that I didn't get that better entry way up here. Be looking sweet right now. It's tempting to add to my position when it retraced close to risk here, but I didn't do it. Should have did it. Be looking sweet right now. And I would only add to my position on a retrace on the first look. So if it came down here and it retraced back up close to my stop again, I would not add to that because there's a good chance we're doing a W pattern and going to break out to the upside. But if it just came back for that retrace of the candles before it, close to my risk, then I can add to my position and then see if it wants to go down to the target or get stopped out for a small, for that loss. But once it comes back down, it comes up for a second look, I'm definitely not adding. All right, let's go look at the 5-minute candle. It's a lot of red candles here. So we got some retracement overdue. right? 6 red candles in the 5-minute. New one's going to open here in 10 seconds. Yeah, I might just have to jump out, wait for a new opportunity here. If this doesn't want to get going down. Come on. Do that again. All right.
Order filled.
Wow. I'll take the money off the table on that one. I'll get back in if it wants to break.
Order submitted.
Oh, it's breaking now. So, missed that on that break. I'll wait for another setup, trader. So, that's going to put me down 260 on the day. And now there it goes. Of course, like 2 seconds later, story of my life on this channel. 2 seconds, 3 seconds, boom. I'd already be way back in the green zone, be in profit right now. Unbelievable. Got impatient, traders, impatient. I was like, I'm going to just take it off and get back in on the break. But by the time I got out, I couldn't get back in on the break. It happened so fast. All right. Wait for the next trade.
Order submitted.
Okay, I'm going to get into the Dow Jones on the long side if it wants to break this W and look for a move to the upside. It's very oversold right now. And we got a nice W pattern forming up here. I'm going to jump in long 2 contracts. My stop just at the bottom of this W right here. I'll do it this way. I don't think it's going to get quite that high. Looking for it to get to the bottom of this right here. Right there's my target. Stop will be there. Okay, going to jump into Dow Jones long, it looks like.
Order filled.
Okay, in long 2 contracts with Dow. Like I said, very oversold right now. I think we're going to see a run back up to the top of this before it decides to go a direction down or up. All right, here we go. It's getting stuck a lot right here, though. I might need to take this trade off the table. Wait for it to break out. All right, next candle goes up. We're going to take it. Wait for it to break out. It's flagging. It might break to the downside here. Let's see. It's out of the oversold zone, so that anything can happen now. I feel like I should take this off and then put my entry to when it breaks and starts to move up again. Last time I did that, I was too slow and I missed the re-entry. It's getting stuck.
Order filled.
All right, so out of that trade, so now I'm down to $15 loss. Get back in if it wants to get moving.
Order submitted.
Let's see if it wants to get moving. I'll get back in with 2. All right, so I got an opportunity to do a little scalp here for Green Day. We're back above this this level right here where we had all this resistance, getting back above it, retracing down into it. Could get long right now, looking for a run back towards the top of this. Just a small move, a $20 move, if you will, and then squeeze out a little Green Day and a little scalp trade from here right into here. Tiny little move, but looking good for the Dow Jones. It's found its support. It's trending upward. Got this bigger, messy W, but it's breaking out. And then there's a draw to the upside. So a lot of reasons that this is going a little bit higher. And my indicators on my other chart are showing me more likely to go up than down right now. And gold, what a sell-off in gold. Man, I'm so mad that I missed that. All right, right here would be the long. My stop would be there. All right, so let's get in with 2 contracts.
Order filled.
A little bit late. Sell stop market.
Order submitted.
If it wants to break down here and fake me out to the downside, then that's where it'll go. All right. And here we go with gold. Or not gold, Dow Jones. If it wants to
Order
back. All right,
filled.
so I'm out $20 on the day. So let's see. Am I actually green on the day? I started the day with $7,420. Now I'm at $7,406. I need another $15 because of commissions. All right, let's do it again. Let's do it one more time. Let it come back down. Where are we at here in the 5 minutes? Just opened. Let's do it this way. If this red candle wants to go green, should be able to scalp another 20.
Order submitted.
All right, red candle turns to a green candle. Scalp another 20.
Order filled.
Okay, back in. Come on, push a little higher, dude.
Order filled.
Okay, so now I'm out with $60 on the day, but after commissions, looks like I'll be up $17. All right, traders, that's going to do it for me today. My day runs out at 11 o'clock here in about 25 minutes. So $11 Is that what I said? What was it? $17 green day today. $17 green day. Squeeze out a little green day with little scalps there at the very end. I don't like to scalp as a method of trading, like as my only method of trading, because I feel like it's something that can catch up to you really quick. You know, hitting $20, $30, and then a big move happens like lightning, and then you go down 300, and then all those $20, $30 get wiped out. So when it's like the only method of trading, I think it's a really hard way to go because of those wipeouts that happen. But when your normal method is $500, $600, $300 trades, you know, those cover those wipeouts pretty easy. And if the scalping is just to get a quick green day, then it's not, for me, it's part of my plan that I can do it. Because had I wiped out here $300, and I just would have been like, all right, well, I'm done for the day. Tomorrow, hit the normal setup, make $500, and I'm right back on track. But if scalping was my only method, then it would have taken me, you know, a lot of trades to get back to even, and then I can get a wipeout again. So I don't like to scalp as a normal method of trading, or my only method of trading, I should say. But it does work in little moments like that. All right, everybody. See you tomorrow.